Welcome to Trade Pro. Due to highly popular demand, I'm testing how to actually trade with the RSI the real way, including MACD and stochastic strategy 100 times in a row so you guys can see how it performs over a series of trades. This has got to be one of my most requested videos ever, so it's going to be interesting. Now, this guy, Profit Market, just want to give credit to him and his channel. This is the strategy I'll be testing, so check out the video if you want to see everything he says. But I'm going to go over the strategy here, show a few examples, and then get into the 100 tests and show all the results from the testing at the end so you guys know exactly what to expect for the results of this strategy. Well, let's get into it. If you guys appreciate these videos, make sure to hit the thumbs up button, comment down below for the YouTube algorithm, and subscribe if you haven't already. Also, check out my Webull link for 2 free stocks valued up to $1,850. All you have to do is sign up, deposit $100, get your 2 free stocks valued up to $1,850, and then you can sell them, withdraw it all, and take it. You don't need to keep using the app if you don't want to. There's no point in not doing it, so check out my link down below. Thanks for listening to that. Now let's get into the strategy itself. All right, so now I'll go over the strategy, show a couple examples, and go over the indicator settings. So for the RSI, we have a 50 line added onto it, but default settings otherwise. So length is 14, and I just took a horizontal line from over here, popped it onto the RSI, and changed the coordinates to 50. How we're actually using the RSI is as a trend direction indicator. So when the RSI is over the 50, that is considered an uptrend. You can only take longs if the RSI is over the 50 line, and you can only take shorts if RSI is below the 50 line. We're considering that the downtrend. So this is our trend direction indicator. Then we have a stochastic, which has the settings as 14, 3, and 3. Essentially what this is for is when you see stochastic go overbought above the 80, you're going to be looking for a short, and then to take a long, our stochastic needs to go down below the 20 line. And then there's the MACD, and the settings are 8, 21, and 5. So those are changed. And this is similar to the others. We're just waiting for a cross down for a short and a cross up if we want to take a long. So let's go over an actual example here so we can show you how to do the actual take profit and the stop loss placement. All right, in this example, we see the stochastic goes overbought here. So we're looking for a short position, but RSI needs to cross below the 50 line and the MACD needs to cross down. So we need to wait until that happens. The MACD crosses down right here, but the RSI still doesn't agree. So we have to wait. Right here is when all 3 of them agree. And what's important is at the same time, the stochastic is still not in the oversold position. So we can enter a short position on this candle. So we're going to enter a short on this candle. We're going to place the stop just above the swing high. And we're actually going to be waiting to take our profit until both stochastic and RSI have gone oversold. So that doesn't actually happen until way over here. So if we wait for RSI to go oversold, it doesn't actually happen until this candle. So right here would be where our take profit is, giving us a 1 to 2.72 risk to reward ratio. Really, really nice risk to reward ratio on this one. So just to recap that trade, stochastic overbought. We have the MACD cross down, and we have the RSI go below the 50 line, all before the stochastic has actually gone oversold. And then next we simply wait until both stochastic and RSI get into the old oversold territory to actually take our profit. Okay, next example. On this next example, we see the stochastic go oversold, so we're going to be looking for a long position. The RSI then crosses up above the 50 line and the MACD crosses up shortly later. Stochastic is still not in the overbought territory, so we're good to enter this position. We're going to take a long position on that candle, stop loss just below that swing low, and we're going to wait until RSI and stochastic have gotten overbought for us to exit. Looks like that occurs right around here. So on this green candle, So that would be where we take our profit right around a 1 to 1.04 risk reward ratio. Let's go to another example now. Here's another example where the stochastic goes oversold in an uptrend. We then wait for the RSI and the MACD to signal a long, and it occurs right here with the RSI crossing above the 50 line. MACD is already crossed up. So we're entering a long on this green candle right here for our stop loss just below the swing low. And remember, we're going to wait until both the stochastic and the RSI are overbought for us to take profit. Looks like it occurs right here on this candle. So this trade gives us a 1 to 2.19 risk reward. Now I'm going to go over one more short position and then get into the 100 tests. In this example, we see stochastic go overbought right around here. We then need to wait for the RSI and the MACD to both signal a down move. So we get that right here on this red candle where the MACD is crossed and the RSI is now below the 50 line. So here's our short entry. Stop loss is going to go just above the swing high. And then we need to take our profit once both stochastic and RSI have gotten oversold, which happens right on the very last candle here. So it looks like it's around a 1 to 1.43 risk reward ratio. Not bad. So that should pretty much cover the strategy and how it works. It's really simple. And now I'm going to get into the 100 tests and we can actually see how this performs. All right, results are in after the 100 trades on Euro-Dollar 1 hour time frame using a variable risk to reward ratio, which averaged out to a 1 to 1.494, and the highest was 1 to 4.32, while the lowest was 1 to 0.36. So risk reward ratios were all over the place, but that's just the average on there. Time for 100 trades was 14 months. Clearly it's going to be a lot of time to get 100 in on the hourly time frame. That's to be expected. And there were 51 winners, 49 losses, with the most lost in a row being 9 and the most won in a row being 6. The gain on the account overall was 27.2%. We get that number because the total wins worked out to plus 76.2% on the account, while the losses worked out to minus 49% on the account. So we got a net gain of 27.2. So yeah, it's pretty medium level strategy. Not that great, not too bad. But one of the things I wanted to say is I did add in a 200 period EMA because when I started testing it, it was absolutely horrible, destroying itself if you just take the RSI as the trend direction indicator. So added in the 200 EMA and then followed all the other rules. But yeah, it was not profitable whatsoever. It was a huge loser if you don't have that 200 EMA there to determine the longer term trend direction. Because the RSI just doesn't do a good job of determining the longer term trend direction when you have just a 50 line on there, if we're following the rules exactly. And then another thing I wanted to note is what the guy says in his video when explaining the strategy with the MACD, stochastic, and the RSI. He says, All right, guys, this is how you combine multiple indicators in order to get a much higher accuracy. And I completely disagree with what he said because he's using 3 indicators that are all momentum oscillators. So they're all telling you the same thing, almost the exact same. If you look at all 3 of them, they're all moving in unison. So you don't get more information by using all 3 of them. It's not a stronger signal when all 3 of them give you a signal than when just one of them gives a signal, because they're all giving the same signal. So I definitely don't think he's giving good advice when it comes to that. Maybe in other areas he is, so I'm not saying he's wrong in a lot of other things. I'm just saying that one thing that he mentioned was inaccurate. And based on the test, also, we could say that, without the 200 EMA, it was complete trash. So it lost instantly. I could tell that it was going downhill fast and I needed to do something about it. So I threw in the 200 EMA. But yeah, so yeah, no, not trying to discredit him or anything. I'm just saying that thing that he talked about with the 3 indicators and saying that's how you combine multiple indicators is just wrong. It's wrong. That's incorrect advice. That's not how you combine multiple indicators. He's actually doing the opposite of what you should be doing. You don't use 3 momentum oscillators. You take a trend indicator, maybe a momentum oscillator, a volatility indicator, a volume indicator. That's what you combine. You don't combine 3 of the exact same. That's like combining like 4 different volume indicators or 3 different trend indicators. It's the similar sort of thing. They're all telling you the same sort of deal. All right. So yeah. So that's all I have to say about that. Let's go to the spreadsheet and see how it is. All right, here it is on the spreadsheet. Not too much to say about it, but falling at spot number 29 out of 56 strategies tested so far. So pretty mid-tier, a little bit worse than mid-tier. But yeah, I would not really recommend trading this way. You can potentially use the concept, but as far as this strategy goes, not exactly ideal. But anyway, guys, hope you enjoyed the video. Make sure to hit the like button down below, comment for the YouTube algorithm, subscribe if you haven't, and check out the Webull link for 2 free stocks valued up to $1,850. There's no point in not doing that. All you have to do is deposit $100. You get your 2 free stocks. You can then sell them and take the money if you want. Don't even need to keep using Webull. Now, have a great night, guys. Thank you for watching.